Bitcoin is starting to feel the pressures of the current resistance range, breaking down from the $22,600 to $24,000 horizontal macro resistance. We're going to go ahead and discuss the short term today, running a full technical analysis discussing the next move for Bitcoin. Let's go ahead and jump into it. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. We're going to keep today's video nice and short and sharp. We're just going to be talking about the short-term price action, particularly the short-term price action and reaction at our macro resistance, being that level between 22,600 and 24,200. You can see on the chart over here, we have currently pushed into that resistance range and have slightly come down below it. So we're talking about what we think is going to happen next, what this means, and obviously our technical analysis and structural analysis on the smaller time frame, as well as briefly discussing what is happening on the macro. Now, before we do get stuck into the video, go ahead and smash the like button, hit the comment button. If you're new here, do consider subscribing. We do daily technical analysis videos for Bitcoin, structural analysis for Bitcoin, and of course, the broader markets as well. You can also join our Telegram channel, which will be the second link down below. Access to all our news events, charts, analysis, videos, updates, everything you need to stay on top of the market and all of its intricate details. You can also join our VIP channel over here. You can see nearly 520 members. Of course, all the videos are posted in here. We do have daily trading signals. Every single trading signal has specific entries, targets, stop losses. As you can see, our recent trading signal, 150% profit there on APT short. You can go ahead and find more information in the free channel. Of course, you will actually also get access to our group chat with all of our members as well. Let's go ahead and start with the market data. So currently for January, we will see a little bit of a drawdown over here, obviously down to about 36% from 39%. We have seen a slight pullback in the last 24 hours. Of course, while we're at that resistance, we're expecting volatility, volume to start dropping. We're expecting price to consolidate. And we're expecting to see a reaction to either side depending on the directional break. So 35.95 currently, volume around 87 billion, still around the same, and liquidations up 100%. It looks like a lot of longs would have been stopped out there as the price actually moved a little bit lower than most people expected. Let's take a look at the short term over here. We did have a validation point over here for the short term shorts. You can see that we did drop down below this level here, which of course was our trigger for a continuation. We are currently testing on that. We did drop below this local low here, which is that lower resistance range, which would have liquidated a lot of people on this drop down below. So we'll come back and of course talk about that shortly, but let's get back into the charts. Volatility 2.17%, again slightly on the rise. It was a 30-day period, so it will start rising over the next couple of days. And as we can see over here, liquidations mostly from longs. We can see we did have a pretty even distribution of shorts and longs in the last couple of days. Obviously that is because we have very much had a sideways consolidation, right? We've had this consolidation zone, we've had a chop, up, down, a lot of swings, a lot of liquidations down, a lot of liquidations up. But in the last 24 hours, we have seen the majority of these liquidations come from longs, and it is slightly stacking towards the longer side, with about 80 to 90% of those liquidations actually coming from long positions currently. Let's go ahead and discuss the traditional markets, and then we'll get into our short term. Okay, the DXY. So let's take a look at the DXY, and we'll go down to a 4-hour chart. Excuse all these diagrams, we were talking about these yesterday. If you do want to find out about all of that kind of stuff, go watch yesterday's video, it's all in there. But for the short term on the DXY, we have still got this pennant formation. We did break down from a smaller pennant. It looks like we're developing a falling wedge structure over here. Again, a falling wedge structure within a descending channel. Again, this is a bullish reversal pattern. We do expect some sort of move towards the upside. The invalidation for a move towards the upside is of course a loss of 101. So losing 101 will confirm that bearish continuation downwards. Until then, we are expecting some sort of continuation back upward within this pattern until, or should I say, unless 101 is lost. 101 being down over here. So I'm going to go ahead and draw it in. You can see 101 is down over here. This double red line over here is the trigger for a move towards 101. So losing this trigger will result in a little small capitulation down to 101. Whether or not we lose 101 is another question. Unless we lose 101, we do expect some sort of reversal towards the upside within the next, 10 days to 20 days. Okay, so keep that in mind. Of course, if the DXY rises, we do expect a pullback in the traditionals as well as Bitcoin. So we do have to keep that in mind. Looking at the Dow Jones, guys, not really much has happened again overnight. We're still in exactly the same spot. Breaking over this dotted trend line over here will result in a trigger move up to 35,000. Of course, that being our major impulse and of course being our major resistance, breaking through 35,000 will actually result in a strong continuation. However, losing a local low over here at 33,000 can continue in a continuation downwards to 32 and potentially 31.2, which is that downward trending resistance. So keep an eye on that as well. Looking at the S&P 500, we have actually closed a daily candle above our downward trending resistance. A lot of people are saying we're still within the resistance. I'm not too sure what chart you're looking at. Maybe the log chart. On the standard chart, we are very much out of that resistance. However, the key thing is the weekly chart, guys. On the weekly chart, we are currently within that resistance. Now, technically we are actually out of it, but since it's scaled down on a larger time frame, it looks like we are actually within it. The important thing is that we do close a weekly candle within it. So we got about, how many days over here? We've got two days and 20 hours to remain within this downward trending. If we do remain in the downward trending, we are going to be rejecting from the 50 EMA, guys, on the 7-day chart, which of course is very bearish, and we'll be rejecting from downward trending resistance. That could definitely result in S&P 500 taking another leg toward the downside. Where will it go if it goes down again? Well, we're looking at our lower zones, so more particularly looking at somewhere within this target range, potentially a lower target range around 3,700 to 3,600 if that does play out. Okay, so the bearish scenario for the S&P 500 is still in check. DXY support, S&P 500 at resistance. We could potentially see a pullback in the markets, which would go hand in hand with what Bitcoin is doing at resistance over here over the next couple of weeks. Again, this correction will most likely be a healthy correction unless lows are swept. Now, it's not guaranteed, guys. If the S&P 500 does actually close above, we know Bitcoin will have a higher probability of actually pushing through this resistance range and continuing upwards. So let's very briefly discuss the macro and then let's get into the short term. So very briefly, the macro, guys, what we are seeing right here is a reversal pattern. We've been saying this the entire time. This was our falling wedge structure, a bullish structure. We actually told you guys about this weeks before we broke out. We were talking about the falling wedge breaking up over here, and we're actually talking about a falling wedge developing even at this retest. So this entire time here, we're discussing the falling wedge structure. However, guys, we have broken upwards. Our measured move was actually going to take us all the way up, guys, to 28,000. So a measured move has actually completed about 50%. That's perfectly fine because measured moves take us to the nearing resistance. They take us to the nearing major resistance, okay? They can potentially take us higher, but we do need to look at our horizontal levels to validate and confirm those continuations. So what are we looking at here? We're looking at something called a reversal, okay? This is a reversal, okay? For a reversal to develop into a macro uptrend, we need to clear previous local highs, including previous horizontal resistance ranges. As you can see in the VRPV here, we have a significant chunk of resistance right over here, which spans between that 22,600 up to about 23,300. Again, you can see there's a local peak over here. We actually double topped over there. We hit the top again. We rejected perfectly from that level. You can see in the VRPV over here, the moment we drop below that, the next chunk of resistance within this resistance range is weaker. So you can break this resistance range up to two parts. You have stronger resistance on the downside, you have weaker resistance on the upside. As we approach and push through stronger resistance over here, we're going to have increased we're going to have an increase in bullish momentum, we're going to have a decrease in horizontal and historical resistance, and it's going to allow the price to flow more freely through our resistance range and potentially upwards into a continuation. So the trigger for an upward move right now, as stats, is a close on the daily above 23,342, okay? That is the trigger for a continuation upwards. The upward move can take us as high as $28,000, okay? Looking at the VRPV here, you can see a significant drop off in trading volume. As soon as we break through that level, we can basically continue upwards with decreasing historical trading volume. A low resistance range with bullish momentum and increased volatility will allow a price to push through our level. However, guys, until we break through our resistance, we are at a resistance level, and therefore the short term is still favorable in shorts. This is what we've been saying for the last few days, guys. Well, weeks even. We're saying at this resistance level, while we remain at resistance, shorts are more favorable. It doesn't mean we're going to go down. It just means the probability that we do reject is greater. So currently we are in a reversal pattern. Unless we break over that trigger and get out of resistance, we're still in a reversal pattern. The macro uptrend starts here, okay? Once we break through this resistance level, particularly this top over here, we're in a macro uptrend. For a macro uptrend to develop into a bull market, we need to break through the prior yearly low resistance of the bull market top. This is the yearly low resistance, 30,000. Looking at the 4-year cycle, you can see every single time we break through the respective yearly lows, we enter a bull market, okay? monthly close above that trend line enters a bull market. Monthly close above 30,000, we enter a bull market. The bull market does take a fair bit of time to start to build up momentum and strength. You can see the distance between that breakout and across the monthly close on the Ichimoku cloud baseline over here is that distance in which the bull market is starting to ramp up some strength again. It takes some time, but breaking over that 1 month candle on the baseline of the Ichimoku cloud is when that bull market momentum really kicks in and we really start pushing upwards nice and strong. And that can happen around what I expect to be before April 2024. So around and on to April 2024, according to date ranges, that is when we expect it to occur. So let's go ahead and do our short-term analysis, guys, for Bitcoin. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to the reward center where you can get up to $4,163 in rewards and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So, as you can see really quickly, just going off what we've seen prior, we had a horizontal consolidation. We broke upwards. We are now currently in that resistance range. So let's go ahead and delete some of these lines. This area here that we're looking at corresponds to this exact circled area over here, okay? This circled area over here, that resistance range. So that is where we're currently zooming up on. You can see that on here and on here, we are currently just slightly underneath that lower resistance. So what we do know, however, now, what we do know for a fact is this line over here, represented by a red line, is a resistance. We are technically underneath a resistance. So what we're going to do first and foremost is try and identify a few structures, and then we'll go ahead and identify our technical indicators we're going to use to assess the trend. So first and foremost, let's go ahead and draw some uptrending trend lines. So we'll take local lows to tops, so we can see we have an uptrending line over here. We can actually see from a structural basis, we've actually broken down from our uptrend. Now, if you don't believe it, what you can do is you can invert the chart and you can see a very clear breakout. So sometimes inverting the chart can help check your bias. If you're biased towards a certain direction, invert the chart, look at it from a different perspective, and then you should have that same, that different idea. If you have a different idea when you invert the chart, you have a current bias. For example, if I expect the price to go up here and I think it's still bullish and we have broken down, and if I invert the chart and I say, oh yeah, the price will go up here, then I have opposing opinions depending on which way I'm looking at the chart, and therefore I have a bias on one of my opinions. And the bias right now would be the price going upwards as we've broken a uptrending support line. Therefore, we do have a shift downwards. Not only do we have a shift obviously on the trend, we also have a shift in momentum. Let's go ahead and take a look at the 4 hour. So the 4 hour RSI has been talking about this for a while now. It's been warning us. We've had a decreasing RSI and we've had a rising price. So let's go ahead and pinpoint these levels in. We have our RSI peak over here. We have our RSI peak over here. We have the uptrending support line, uptrending resistance. So the uptrending resistance, uptrending support, the RSI divergence printed signifying a decrease in momentum. Obviously, when we have a decrease in momentum and a discrepancy between a rising price, we have a bearish divergence. That signifies a shift in momentum towards the downside. Generally, this occurs much prior towards to when the trend actually shifts. As you can see, this actually printed well before the fact when the trend has now lost the uptrend. And therefore, guys, the divergences in RSIs can be what we would say leading indicators to what the price is going to do, because price moves on momentum generally, okay? Momentum, volatility, and volume is what drives price action. So generally, when we see the momentum shift, we can be kind of expecting a change in trend at some point, and particularly when we are in resistance ranges, we know where that shift in trend is going to occur. So what we have seen here, guys, is a drop down this uptrending support line. This is of course a very major trending support. This trending support has lasted quite a fair bit now. It's been going for about 12 to 14 days, and it has spanned around 30%. In fact, this trend actually developed within that falling wedge structure. It developed at the end and within the falling wedge structure, and therefore this is an extension of that falling wedge measured move. Therefore, we can say if this actually does break down and continue down, this will be that peak of that measured move from the falling wedge. We'll have a healthy correction, reset the trend, find a new base of support before we continue back upwards. So let's take a look at some other things. Where are we going to continue down to if we do continue down here from support? So we're looking at our VRPV. What we can see over here, guys, we do have a significant drop in historical trading volume as soon as we lose this local low area here. You can see this other trend line is that local low printed over here, and that was January 21st at 4 p.m. The price range was about 22,520. You can see that as soon as we drop that, we have a significant drop in the VRPV all the way down to about 21,500. 21,500 is the upper resistance of that prior horizontal channel. That will be our first target, of course, for a continuation downwards. You can have minor targets in, looking at something like 22,000 as a small little peak in the VRPV and a psychological support range. Moving downwards, guys, we can see a chunk of support around about that horizontal range, which is expected. Which is definitely expected. Obviously, consolidation prints that historical trading volume and more orders in that range, and therefore on the VRPV it's going to be a higher area of resistance. So you can put orders in there. You got 20,800 as an export and 20,121. Of course, 19,500 and more importantly 19,200 as the VRPV on the daily. So those are our lower targets if we do continue towards the downside, guys. Keep that in mind. For the upside, of course, like we said, we do not expect any sort of continuation upwards until this horizontal trend line breaks. We're looking at that horizontal trend line, 23,352. If that level breaks on a daily, that will be confirmation that this consolidation phase over here did not break down. The uptrend that we just lost, that uptrending trend line we just lost, has been invalidated towards the bullish side, and we have actually created a local high, and that will continue that bullish momentum and strength upwards. We will actually continue in price. Until then, we are very much bearish. We do have bearish momentum. We've lost our trend lines. Okay, we're getting rejected from this horizontal range. We can expect a continuation downwards. Now, this is definitely an upward accumulation pattern. This entire range has been upward accumulation. What do I mean by that? We've had significant impulses upwards, followed by fast and quick liquidity grabs towards the downside for our drops that do not sustain, followed by fast continuations. Horizontal consolidations, decreasing momentum, again, do not sustain. Same thing over here. Horizontal accumulations, decreasing momentum. Every single downtrend is quick and does not sustain, and we push upwards. So we could see something of a sort over here again, this upward accumulation occur, where we do have these sideways price actions with quick and sharp drops that do not develop into downtrends before we continue back upwards. It's possible, but again, these sorts of things can't continue forever. And generally, when these upwards accumulations do flip bearish is when they lose these uptrending supports. But more importantly, guys, they lose these uptrends within major areas of historical horizontal resistance, which is exactly where we are now, horizontal historical resistance. So do keep an eye on that going forward, guys. This is going to be something key to look at. I do really want to briefly go over some technical indicators as well. We just looked at the RSI. Let's go ahead and look at some some moving averages on the smaller time frame to talk about the trend strength, because as we already know, guys, we have officially lost that uptrend line. I'm going to go ahead and draw it in again. I think I've just butchered it. Where was that trend? It was over here, starting over here through these levels over here. You can see our uptrend. Let's go ahead and bring in our moving averages. So what we have over here is our market cipher A, sorry. This is, of course, our 4, 15, 17, 22, 26, 28, 32, and 50 moving average. You can see currently we are underneath the 50 EMA on the hourly. We're looking at the 2 hour over here. We're currently underneath the 50 EMA on the 2 hourly. Again, we have seen that occur over here before. The difference being we've been above that trend line. Again, we're going to need to see a little bit more of a drop down over here on Bitcoin to confirm this. We are actually pushing up again. We could potentially see a rejection on this trend line as it supports and flip. We are looking for a rejection on that 4 hour to 3 hour 50 EMA to confirm this downtrend. As you can see, the 3 hour 50 EMA has been retested for the second time, the first time being at exactly the same spot we retested that hourly back on the 19th of January. So do keep your eyes on that, guys. Confirmation for a continuation downwards from a horizontal standpoint, from a resistance standpoint, has been achieved. Confirmation for a continuation downwards from a diagonal trend standpoint has been achieved. Confirmation for a shift in the trend for a continuation downwards have yet to be achieved. So we're looking for that shift in the trend, which is going to be a break of the 50 EMA, and that will be what triggers a continuation downwards. Until then, we are still very much in a horizontal, some sort of horizontal continuation, a consolidation phase. We do have a lot of liquidity pushing up and down, stopping out short, stopping out longs. We do have our trigger points for a continuation upwards. We have our trigger points for a continuation downwards, and we have our confirmation for that. Everything has been discussed, guys. I think that's going to be the end of the video. If you've got any questions, leave them down below. Hopefully, this has been beneficial. Hopefully, you've learned something. More importantly, hopefully, you do have the information now to go ahead and execute some trades on your own. One more thing, guys, go ahead and sign up to the Crypto Academy. We actually do teach you guys how to chart, how to trade, how to analyze markets exactly as we do over here. If you want more information, contact the Crypto Academy at gmail.com. The email is going to be down below. We'll send you our package, all of the information, what the course entails. It's a 10-unit course with over, I think it's like 76 videos, 400-500 different slides of information, and we cover like 50 different topics in total over those 10 units, from technical analysis base, structural analysis, candlesticks, indicators, trading strategies, risk principles, all that kind of stuff, even psychology, all in there. Go ahead and contact to find out, and we'll see you guys tomorrow. Cheers.